Let's take a look at AMD stock today and examine the fundamental indicators. I'll also show you the volatility, what the volatility smile tells us, and what options are indicating. There's a very high volume focused on the upcoming weeks, especially in terms of options. I'll also demonstrate the 3D volatility and what's happening there. Additionally, I'll show you a strategy that allows for profit regardless of whether the stock goes up or down. But let's start from the beginning. What does AMD? Advanced Micro Devices engages in the provision of semiconductor businesses. It operates through the following segments: data center, client, gaming, and embedded. The data center segment includes server-class CPUs, GPUs, AI accelerators, DPUs, FPGAs. The client segment refers to the computing platforms, which are a collection of technologies that are designed to work together to provide a more complete computing solution. The gaming segment is a fundamental component across many products and can be found in APU, GPU, or a combination of a discrete GPU with another product working in tandem. Let's quickly look at their products. They produce processors. I want to emphasize that their products are of high quality. I have used their processors personally. They offer very powerful solutions. In some aspects, they are comparable to Intel. Over the past 5 years, AMD has made a leap in chip production. Additionally, they also produce graphic processors, which are video cards. However, in terms of video cards, they are currently lagging behind. So AMD is often compared to NVIDIA in many aspects, though its prices are lower than those of NVIDIA. Now let's look at its financial indicators. Yes, we see growing revenue and net income. The company is developing well, but over the past year, we haven't seen significant growth. In 2023, the company actually didn't increase its revenue, despite that year being heavily focused on artificial intelligence, precisely the type of processors and video cards AMD produces. The fact that AMD didn't fully capitalize on this opportunity is not very encouraging. However, the company claims that it will experience significant growth in the coming years, with very positive forecasts for the next 10 years. We'll have to see if this pans out. I also want to draw your attention to its market capitalization. The company is currently valued at $275 billion, yet its net income is not even close to $1 billion. Well, this is not acceptable, to be honest. These are very poor indicators. Considering that the company hasn't shown any growth over the past year, and with such dismal financials, it's definitely not a good sign. Okay, we'll come back to these indicators a little later. Let's discuss its volatility. Certainly, the company is highly volatile. We look at volatility to develop a sound strategy going forward. Well, again, I'll talk about that a little later. Our volatility remains at 50%. Let's look at the volatility smile. The volatility smile reflects not only the level of volatility, but also the level of volatility across strikes and expiration dates. In other words, it provides a broader view. So we see that towards calls, towards increases, the volatility doesn't rise, it remains a straight line. But towards puts, towards decreases, the volatility starts to increase. In general, this situation is quite logical because investors hedge their positions by buying puts. Therefore, in general, volatility towards decreases will be higher than towards increases. Closer volatility, of course, is directed both towards increases and decreases. Let's look at historical and implied volatility. The white line represents implied volatility, so the current volatility, the gray line, is the historical volatility. As we can see, the current volatility is at the same level. Yes, there is a slight deviation, but in principle, historical volatility and implied volatility correspond to each other. This is not a very good sign for a trader because they cannot take advantage of it. I remind you that the spread on volatility usually comes back to its historical norms. One could play on increasing volatility or decreasing volatility, but at the moment, it's not possible to do so. Yes, someone is trying to predict price movements, where the stock will go, but I use a completely different method. I focus on the direction of volatility rather than the direction of price movement. Let's look at the trading volume in the options market. So I also want to draw your attention to the fact that a very large volume is concentrated for the next week and the week after. Essentially, most of the volume is here for the month, which certainly does not add stability to the stock. The more short-term options we have, the more volatility there will be in the stock because these options will need to be closed, thereby shifting to the next expiration date, and the next volatility will be added. Let's see what levels we have here. This is of course level 175 and 160. While 170 is holding for now, we initially surpassed it. But again, all these bars, all these huge volume walls are not so easily overcome. And as we can see, the AMD stock dropped very sharply. At one point, it fell by as much as 9%, but then it bounced back, closing above $170. This is a good sign because if we had fallen below, then completely different positions in options would have come into play. And perhaps the stock would have continued to plummet very sharply. When ordinary people, ordinary investors buy options, the market maker must sell them options. Therefore, to hedge the risk of losses, the market maker begins to buy shares according to delta, using delta neutral hedging. This is a very common strategy. It is a dynamic strategy. Thus, gamma squeezing occurs the more options we buy, the more the market maker has to buy these options and push the stock up. Thus, they create a trigger and a large player sell the shares, and then the gamma levels out. Only when this happens does the stock start to fall. All these options will be out of the money, and therefore the market maker will have to sell all these shares to close their hedge. He earns from the commissions, on spreads, on anything but the movement of the stock. Therefore, the worse things are with the stock, the faster it can start to fall. and the acceleration can be very significant. That's why I always show you this chart related to options market volatility and trading volume. It's very, very important. Before I show you the strategy, let's look at the 3D volatility. Here we have the quintessence. Any professional will immediately understand what strategy can be devised here. It shows all the dates and expirations and all the volatility. The very important chart that I always refer to. So now I want to show you my strategy that I've devised. You can look at the efficiency profile. If the stock rises to $210, we will earn $2,500. If the stock goes down to $145, we will earn $2,000. This is an option strategy. As you can see, this is how it looks. But again, I strongly advise against opening this strategy because uncovered options are sold here. The strategy needs management. In principle, any professional strategy needs to be managed. So at the right moment, you buy options, sell different strikes, work with different dates and expirations. It's not as simple as just opening up this strategy. You'll definitely lose money if you do. I guarantee you, without proper management, opening this strategy is strictly forbidden. Now let's look at what's happening with the stock. I remind you of my philosophy that I don't know where the stock will go. I have no idea. I can't predict market movements. I always say this. I say it absolutely honestly. My main task and my main skill are skillful position and portfolio management. That is, you need to develop a portfolio so that it outperforms the S&P 500. You can also add some hedge through options, combine, open strategies. This is what I demonstrate in all my videos. You've seen the approximate strategy. So no matter where the stock goes, we can make money. We can also build a strategy if the stock is trading sideways through options. All of this is possible. So guessing where the stock will go up or down is certainly not my profile, not my style. But again, personally, in my opinion, I always say that you need to focus on risk and reward assessment. My friends, I don't trade based on technical indicators. I trade based on mathematical expectation and probability theory. Yes, it's complex, but at the moment, in my view, the risk-reward ratios are not in favor of the investor, although there is significant consolidation where we could see growth. And again, I'm not saying the stock can't grow. It can grow, but think about how much you can earn and consider how much you can lose. I've also launched a poll on my channel to see where this stock will move over the course of a month, and in a month, we'll summarize the results. I also want to come back to its valuation. Look, it's currently valued at $275 billion, but it only earns $800 million. I want to say that the valuation is absolutely abnormal in my view. Personally, I believe it should be much, much lower to correspond to its net profits. I say this because the company, without a doubt, is very strong with a very strong product. It's very promising. Its graphics processors are very powerful, but you just need to be objective. Such a high valuation and such low net profits speak for themselves, you understand. So I'm not saying that the company is bad. I'm saying that it's very, very expensive. That's what I want to convey to you. Also, I want to remind you that soon, when I get monetization on YouTube, I will launch a new project, open a new account, where I will replenish it with income from monetization. We will start investing from scratch. I will create a competent portfolio, show how I manage it, which stocks I buy, what strategies I use. Everything will be completely detailed, everything from scratch. Everything will be as transparent as possible. How much money do I have in my account? That's why I use artificial intelligence voice to show you big accounts, because I'm paranoid about this plan and don't want to be found in something done to me. So subscribe not to miss the beginning of a powerful experiment. Let's get back to AMD stocks. The company's report is coming out this month. At the end of April, we'll be watching its performance as well as its volatility. At the moment, I don't have this stock in my portfolio because I believe that the risk to reward ratio is not in the investor's favor, but in general, later you will see if I add it to my portfolio or not. I also advise you to watch this video where I analyze another semiconductor stock. These stocks are quite similar, so it's worth paying attention to the entire sector. Good luck to everyone.